Hello there, a warm welcome to the Virtual Craft Distilling Expo. Today's talk I think is going to be incredibly beneficial to our delegates. I'm joined today by Karen McFadden, who is the Associate Director of Catax. And the discussion is on, is your distillery claiming research and development tax relief? What we'll be talking about today is what it's about, how you become eligible, and why so many distilleries are missing out on this. Now, Karen has worked in sales for the last decade, so she has a wide knowledge of various sectors, and she believes that education is key, and working with clients to understand the solutions available to them. So without any further ado, I'd like to welcome Karen.
Thank you so much, Bernadette. Yeah, hi guys. Today I'll be talking to you about the concept R&D tax relief. As much as a lot of this will be aimed at breweries and distilleries, don't think that you can't claim if you're a manufacturer or a subcontractor. If you are connected to the industry, then it's still worth a listen, because it might be that your sector is qualifiable as well. So I'll just quickly share a presentation I have here. Okay, so as Bernadette had introduced, my name is Karen McFadden. I'm an Associate Director for Catax, and yeah, just going to talk you through a few different tax breaks and a wee bit about ourselves. So what I'll talk to you about is research and development, and I'll also touch upon a little bit on owning commercial property, and also if you've ever had asbestos to remove within your building, because there's a few different tax breaks. And a lot of companies that we work with actually become an introductory partner with Catax, so I'll talk you through what that looks like as well. Most important one though, so what exactly is R&D tax relief? This is a government initiative, and it's basically here to reward UK limited companies as long as you can showcase that you're doing something innovative. Now, HMRC's definition of innovation is you have to be finding, using or creating an advance in the field of science or technology. And to be honest, that's quite heavy. I tend to explain this tax break in a much easier way, and hopefully the purpose of listening to this conversation is to see if any of what I talk about actually crosses over into your sector. As much as I will be making reference more to distilleries, like I said, it's much wider than one sector. And the really cool thing with this initiative is you can go back 2 full tax years. So I do advise that if you do have your financial year coming to an end very soon, then it's something to possibly look at, because you don't want to miss out on anything from a couple of years back. But I tend to find that innovation falls into 3 different categories, and it will either be new product development, so bringing something brand new to the market, or it will be advancing or innovating something that already exists. So you're looking at the market and you're going above and beyond what's the go-to answer. And finally, which is missed a huge amount, especially in construction and architecture, is process innovation. And I'll go into these 3 a wee bit more in the next slide. What is it that HMRC are actually interested in? Well, let me tell you, they don't really care about what you're actually producing. They care about how you got there. So it's always the journey that they're interested in, not the actual physical thing that you've brought to the market. And what they really love and what they deem your project successful on will be what they call technological uncertainties. Now, to you and I, that's the headache moments. The parts of a project or a job that you've won that you've got hurdles along the way, you've got challenges, all the difficulties of a project. That's the technological uncertainties. A few pictures at the bottom just to sort of showcase a few obvious areas of R&D. You'll see their development of innovative recipes. That's pretty much the biggest one in distilleries. Now, I won't go into every single detail that I've put here. I'm happy to circulate the slides if any of you do want a copy. When it comes to new product development, no matter what sector you're in, if you're developing something brand new, a first of its kind, there's nothing else like it, those are key indicators that you're doing research and development. If you're naturally bringing something to the market that either doesn't exist, or there's maybe a basic version of it, but you've made a more advanced version, then typically you will have a very natural experimental phase, and you have a lot of natural uncertainties, because if you're making something brand new for the first time, there's no guarantee that it will work. There's no safe measure that you've looked at your market and this has already been tried and tested 100 times. this is something that you will do a lot of trialing and testing in. So when you do look at things like we've developed this, or we've built this, or we've manufactured or created, again, big key indicators that there's R&D activity there. Now, advancing something that's already on the market, I briefly explained that this is where, when you look at your industry, there will be a go-to answer. There will be a bog standard way of doing what you do. This is when you've went that next step above and beyond. So really, when you're pushing something, when you're pushing boundaries in your sector, you're going to be having conversations like, at the moment, this product does X. Let's see if it can do Y and Z. And by trying to push boundaries, there's obviously an objective you have there. You're trying to make something greener or lighter, or in the brewery sector, taste better or look better or have a better texture, or there's 101 different advances that you will want to do. And in order to get your product to the level you need it at, again, there's going to be a big phased approach. There'll be experimentation work. There'll be conversations where you're going, right, I don't quite know how we're going to put that there, because if that looks like this and we've got 10 of them, we need it to be at 5. If these are the kind of conversations that you find yourself having, again, it's big indicators that there's R&D activity there. Process innovation. Now, this is a really interesting one, because I like to talk about this one when it comes to problem solving. A lot of companies I speak to, and don't forget, I talk to everyone from a brewery to a manufacturer to house developer to software. The sectors vary, and they're quite large. But what I find in a lot of companies is when staff talk about overcoming problems, they kind of have this attitude that, well, that's my job. That's what I get paid to do. There's a problem, we need to figure out a way to overcome that problem, and Bob's your uncle, we managed to do it. But this is where you need to figure out, okay, well, that's great that you managed to overcome it, but how did you overcome it? Did you simply go on Google, pop your question in, and up popped an answer? Or did you go to the market and there's 101 books available that you can use that give you an answer? Or is there an A to Z instruction list that you've got in your field that you follow step by step and it works out perfect? Okay, if all these things exist, then there's no R&D. Any competent professional in your sector should be able to go and do that as well. Process innovation comes down to the jobs or the projects you have where you hit a stumbling block and the go-to answer isn't appropriate for what you're trying to do. This may also come into play where, if you imagine 2 distilleries, you're wanting to develop the exact same drink. Let's just say a strawberry vodka. Even though you're both producing the same product in the end, how you actually get there will be your own methodology. Because I don't imagine you'll be phoning one another up saying, listen, how did you manage to ferment that? And how did you manage to get the sweetness there right? And how much sugar did you add in? Because we found it was really sticky. You're not exchanging secrets like that. So essentially you are having to come up with your own methodologies and your own processes to get this drink out there. So that again is process innovation. That's not just you doing your job. You are having to go through experimentation. And at the end of the day, even though you have an objective, the guarantee of reaching that objective, if there's a bit of uncertainty there, that should tell you that there's R&D activity. Now, I won't go through every single one of these word by word. Again, I'll circulate these slides, but this is just some examples of research and development in the brewery sector. Now, I've put recipe development up there as number 1. You will find that that's pretty much what you guys do. You're trying to develop recipes, you're trying to, enhance flavors, you're trying to, have a new brand or a new product out there, you're trying to make things taste better, look better, could be you're trying to advance the shelf life of products. All this stuff is great, but what revenue and customs are interested in is how are you actually doing that, and is it simple? And 9 times out of 10, it's not simple. I have a client who is Dundee Gin Company, and they were looking to make a marmalade gin, and they decided that they didn't want marmalade extract, they wanted a full marmalade jar in every bottle of gin. How on earth do they do that? Marmalade out a jar is very sticky, it's clumpy, it's thick. So they have to go through a full process to figure out, right, we really want the sweetness from the jar in the bottle, but we need it to be in a liquid format. How do we do that? And off they go. So apart from manipulation of ingredients, there's also research and development in, the process of how you develop things, so the steps that you take, and also the types of machinery that you use. So I know a lot of breweries where, okay, they buy standard material or standard tools off the market, but it may be that actually the canning line that they have doesn't integrate with the tanks or the kettles or whatever they're trying to integrate it with. So they actually have to bring an engineer in to get two pieces of machinery to talk to each other. Now, if there was a piece of machinery that was out there already and you could just go buy that, HMRC would be asking, well, why didn't you just go buy that? Was it too expensive? Did it not fit in the building? And depending on your answer, you might say, well, yeah, there is an option out there, but it's 10 times the price that I can afford. So I had to actually replicate one on a smaller scale. There wasn't anything out there that I could just buy to do that. So I actually had to buy a few different pieces of technology and merge them together. That's innovation. So again, improving the nutritional value from ingredients. Let's say you're trying to make a drink more calorific, less calorific. Let's say you're trying to appeal to a new market. So you're trying to make something vegetarian or gluten-free or vegan. That these are not standard things that you just have a rule book or an instruction guide to follow. These are things that you have to really go through the motions with. And this is really where R&D comes in. One that I will mention also is the use of recyclable materials. So revenue and customs, they love really sexy topics like reducing waste, recycling materials, the circular economy, making things last longer than just one use. So if you've managed to find an element of your projects that you can add in that's circular or somehow recyclable, then it's definitely worth looking to see if that qualifies. Now, in my line of work, there's a number of misconceptions. So a lot of people say to me that R&D tax relief sounds too good to be true. Why would HMRC just want to give you money or give you tax off or tax back? Please note that the reason this tax break exists is so that the government can continue helping you be innovative. You reinvest that money back into your company with the intention that you'll begin to make profit. And from that profit, you pay corporation tax. So there is a circle. It's not just free money that you're getting for the sake of it. There is an intention that that money will help you make profit one day. But my best advice is if you qualify for it, absolutely claim. Otherwise, it's just money you're sitting there not getting that you're entitled to. Now, I'll go through a few other misconceptions because, again, it might be things you've heard in the past, it might be rumours, and it's just good to kind of go over them. So bottom left, my expenditure was all from funding, so I can't claim. Unfortunately, a lot of people get advised that if they've been given a government fund or a government grant, that they can't actually do an R&D claim. It's total nonsense. There will be terms and conditions within your funding that will either state that it's state aid or de minimis. And depending on what kind of terms and conditions are in your grant funding, that will determine what type of R&D claim you can put in, whether you're seen as a small company or a large one. So the long and short here is if you have been given government funding or grants, you absolutely still can claim R&D tax relief. It just might not be as much as the guy next door who didn't get any funding. Sorry for the motorbike sounds in the background there. There's it's going by. So the second one, my accountant told me I didn't qualify. We work with many accountants, and we do believe that an accountant is there to do your books. They're not there to be proficient across every avenue of tax or even every avenue of finance. It would be like going to a GP and expecting them to do leg surgery on you. You can't expect them just because they have the title doctor that they're going to know everything about medical proficiency. So I would suggest that, unfortunately, whether it's due to lack of knowledge in the field or lack of specialism, R&D tax relief is a very niche sector, and it's something that I would advise you speak to a specialist on regarding your eligibility. Your accountant should want the best value for you, And I wouldn't be offended if they don't know about this topic, or they don't know if you qualify for it, because like I said, it's not something that they should be trained in. But you know, at the end of the day, if it has taken you listening to a conversation like this to then go back to your accountant and ask about it, if your accountant hasn't brought it to your attention until a talk, then I would suggest that this maybe isn't something that they're proficient in. So I would suggest that you get some specialist advice on it. Trade secrets, developing own processes. I sort of touched upon that just in the last slide. Yeah. All my R&D projects failed, and therefore I can't claim. This is a really interesting one as well, because a lot of people I've spoken to have said, well, you know, I did try something, you know, I tried to do X, Y, and Z, and I spent about 6 months on it, but nah, it didn't go anywhere, so I couldn't make a claim. It's total nonsense. If your projects fail, absolutely, as long as you can show that you had the intention to do R&D, then you can still make a claim. And buying off-the-shelf products or equipment, this is again an example of, okay, if you just buy something and it works the exact way it was intended to work, and you haven't had to make any, you know, changes to it or any adaptations, then no, I could go and buy the exact same piece of equipment that you've just bought and do the exact same thing. But if you have looked at the market and you've thought, right, do you know what, this is what I want to do, there's a gap in the market, here's where I'd like to go with my product, I can't really see anything that exists right now in the field, so I'm going to have to buy the next best thing and advance it. Or it could be that actually the product that you're buying off the shelf does exactly what it's supposed to do. However, the piece of machinery that you're using beforehand and after aren't designed to join into that canning line that you've bought. So you have to then bring an engineer in, and you have to get that person to engineer all these pieces of technology to speak to each other, or machinery to talk to each other. And again, that's adaptation, that's R&D. And finally, profit versus loss. This is unfortunately one that really makes a lot of people miss out. If you are a profit-making company, then the intention is that if you're paying corporation tax, and if you're due to pay corporation tax coming up, then the intention for doing an R&D claim is to try and reduce the amount that you owe. And sometimes you can reduce it and then have some cash left over, which is great. The alternative is if you're a loss-making company, a lot of companies think, well, I don't pay CT, corporation tax, so I can't claim. It's total rubbish. If you're a loss-making company, what you actually get is not a deduction in tax, but just a hard cash lump sum. So, you know, the difference is it's a difference in percentage that you get, but it's still absolutely worth doing. You know, it's still money that's sitting there that you can get as a cash injection.
It's quite surprising, actually. Sorry, I'm just have to jump in quickly. How much you can claim for. It's actually probably quite a lot of people out there that don't realise, you know, things like developing things, even if they fail, it still costed them to develop. So that's really helpful information.
Do you know, it's funny as well, because a lot of companies as well think that what HMRC are interested in is the money you make from a job. Yeah. And it's absolutely not. They don't care if a client paid you a penny or £1 million to do something for them. What they care about is, okay, who in your company, staff-wise, was involved in this? Did you use any subcontractors? Did you have to purchase any, you know, software to get this up and running? You know, and it's our job as specialists to look at the expenditure in a company and try and scrape as much as possible. So there's a lot to consider. I'll very quickly go over a couple of examples. And again, you know, it's sort of replicating what I was saying there. This particular example, I did highlight that experimenting with flavour itself is not research and development. Every brewery out there will want to bring out a new flavoured gin, a new flavoured vodka, whatever. And that concept itself doesn't, you know, that's not eligible itself. The methodology and how you get to that flavour, the process that you've followed, the trials and tests that you've went through, the research you've done, that's where the innovation sits. And normally, everything I've just explained there comes down to staff costs, subcontractor costs, time, money, resources, ingredients, machinery, purchases. All that stuff is where the innovation sits.
Yes.
So that was just a client, 122,000 they got back, experimentation.
Wow.
Pretty good.
Yeah, very good. Not going to sniff at that, are you?
Yeah, and here's an example of a microbrewery. 22,000 they got back, a much smaller distillery, but absolutely still helpful to them.
Yeah.
They were actually wanting to produce flavours in the UK that did exist in other countries. Right. But unfortunately, sometimes it comes down to this, where there is a product that exists in the marketplace, but not in the UK. And you might have the idea where you want to try and replicate that over here.
Yeah.
But the quality of fruit is different. The taste of fruit is different.
Yeah.
The elements are different. So you have to, incorporate all that to understand, okay, well, as much as I'd like to make this and it's selling like hotcakes over in America, I'm going to have to really break down the ingredients to figure out how I can make it just as good.
Yeah.
So there was an example. 22,000, that's pretty much what they were doing.
Brilliant.
So I'll sort of stop at the moment on R&D because I think I've said enough on it, and it's certainly a case-by-case basis. It really depends on your brewery, what you've been up to, and I can't remember if I did mention, but the cool thing with this is you can go back 2 full years. I think I did mention it. So with the pandemic being so strong right now, this could be a really fantastic opportunity to talk about the money you've already spent, get it back and reinvest it for moving forward.
That could really be a lifeline to some people as well at the moment, so that's really, really helpful.
Absolutely. So there's a couple more I'll talk about here, and again, it's really just additional information for you to know about in case it's relevant. So first of all, I'll mention about something called remediation of contaminated land tax relief. Now, the only reason I'm making it applicable to this conversation is because the case study that I have here next was a brewery that had purchased a new building in Liverpool. It was an old rubber factory, so they actually had to renovate the space. They spent £35,000 actually removing asbestos and lead paint from the building.
Yeah, that's a big job.
Yeah, total swing from R&D. This is about actually getting a building up to par and removing contaminants within it. From the 35k that they'd spent, there was about 8.5 that we managed to scrape back for them. It's money that they didn't realise that they could even get back.
Yeah, so, exactly.
Yeah, so it's just in case that was relevant to anyone watching. Capital allowances tax relief. This is a hugely complex tax break. The long and short of this is if you own a commercial property, it doesn't have to just be a brewery or a distillery. It could be a manufacturing plant, it could be a supplier warehouse. If you own the property, when you tip it upside down and you shake it, there'll be a load of things that fall out. Now, those are the things that typically an accountant would pick up and get additional tax back for you.
Okay.
What doesn't fall out is the embedded plant and machinery. So the stuff that's stuck in the building, right? All your, electrics, your plumbing, your air conditioning, your heating, your toilets, your kitchenette units, all the stuff that is basically stuck there if you tip that building upside down and shook it.
Okay. These
are the things you can get additional tax relief on. And typically when you buy a building, let's just say you pay £1 million for it, spitball a figure. You don't actually get an itemised breakdown of what all of these items are worth. You just pay $1 million, and that's you've got your building. So it's absolutely vital, if you do own a property, look into that, because it's an additional tax break that you can get on an annual basis. So it's well worth it.
Well worth it.
This is just a final slide. Catax, we work on a contingency basis, so we don't get any money from a client unless they actually get a successful benefit. And because of that model, there's a lot of accountants and lawyers and business professionals that like to partner with us because they want this information to be passed on to their clients. And this is where we do have an introducer scheme. Now, ultimately, it's up to the introducer if they want to take a financial benefit or if they just want to pass some knowledge on.
Yeah.
But you can imagine, you know, if it takes an introduction to one of your clients or one of your professional contacts and they manage to get a benefit, then whatever Catax make, the introducer would actually be able to take 20% of whatever we make.
Wow.
So
That's really cool. That's just a nice extra little thing, isn't it? And considering what you do is advise people where they can find extra money, essentially. Like, you're only passing that help on to somebody else and then gaining something out of it yourself. It's a bit of a no-brainer.
That's exactly it. And I'm very lucky to be in a sector where this is always welcomed information. You know, this is never, I've never been on a call with someone, even if they don't qualify, or even if they have already, you know, made a claim, there's always something extra to learn, whether it's, you know, for a project in the future, or it's something that you're thinking of getting involved in. It does always seem to be a welcomed conversation. And if it turns out that you'd actually due some money back, then, you know, it's a win-win for everyone. This is just an example. Actually, it was a carpet manufacturer who decided to, you know, he knew that he had a lot of contacts in the hotel industry and the leisure industry, knew that there was some, you know, a second revenue income to make, and chose Catax as their partners. And it's just such a lovely connection, because carpet manufacturers, they now introduce us to a lot of commercial properties, and it's really nice, you know, a really nice cycle. So it's just you know, available to anyone who, if they're looking for extra ways to make money in their company and they've got a portfolio of good clients, it might be something to consider.
Fabulous.
And that is me, Bernadette. So please feel free to take my details down. I'm happy to circulate this, or if there's a platform that Bernadette can upload it to, happy to share. Please do have something. Yeah, connect with me on LinkedIn. Lots of content that I share in general. But yeah, I hope that was helpful for you.
That's incredibly helpful. There's so much. I've no clue about a lot of that, and to be honest, it wouldn't surprise me if there are a lot of distilleries out there that don't know that either. So this talk could be something really special to people. You know, if people suddenly realise they could look into that, and suddenly, especially seeing as they can go back and claim if they. And these, you know, a lot of these distilleries as well are in sort of start-up mode. They're looking to get things started, so they might well have been working on things the last couple of years and maybe not realise that they are doing something innovative with their methods. You know, so brilliant. What a good job.
Yeah, I love talking about it. It's a really nice. Like I said, it's a welcomed conversation. It's a very you know, it's not black and white research and development. It's not like a practice that would be accepted in one sector will automatically be accepted in another. You know, it really is a case by case, but hopefully that was just a sort of high level overview of, you know, if you've done anything that I've talked about there in the last half hour, which I'm assuming you will do in the distillery sector, then, you know, please look into R&D, because it's easy money.
Fantastic, that's great. Just on a final note, is there any just to put you on the spot here, please don't feel you have to answer it, but is there any sort of final advice you would like to offer anybody on the way out? I'm trying to think if I've asked a question that can't be answered now.
I suppose people will be wondering what they actually get back. So I would suggest to companies that if you're doing a research and development claim, then whatever the magic number is that we find, whatever we've, you know, deemed your expenditure, then typically you get between 20 to 33% of that back.
Brilliant.
You know, just a bit of an example, you know, if you add up what you've paid your staff, what you've paid your subcontractors, what you've paid out for this project to come to life, and you get a total of 100 grand, then you're looking at anywhere between 20 to 33 grand back, which is handy.
That's fab. Good stuff.
I think that's the main question that everyone asks, and then
how much can I get?
How much can I get, and how, you know, how do you get paid? So
with the process of claiming, is it something that your company does for them? So they submit the information to you and then you do the claim, or is it the case that you guide them on how to complete the claim themselves?
Yeah, so as specialists, we would take them through the entire process, from first of all helping them identify what their R&D is. We would write the report for them and we would submit it to Revenue and Customs. I suppose it is, you know, we're not the only company that does this. There are companies galore local to your sectors or local to your towns. But what I would let you know is that Catax do sit on the R&D board of HMRC.
Oh,
So
wow, yeah.
we are very close to them. We're very up to date on their legislation changes.
Yeah.
And I would say it's probably more reputable to, if you've never done an R&D claim before,
Yeah.
to possibly go through a team like ourselves, just
Yeah.
because if you've never done it before and you're doing it yourself, you're possibly going to open yourself up to more of an audit or red flags, never
Yeah.
being known to HMRC on that.
Yeah.
So yeah, you know, it's obviously down to clients' preference how they prefer to do it, but
Of course.
given that, you know, I would say any company worth their salt should work on a no-win, no-fee basis or a, you know, a contingency basis. And you know, that's the kind of relationship you are wanting to start, because if you're willing to put your time into this,
Yeah.
you know, you shouldn't be willing to do it unless both of you win in the end.
Yeah, absolutely. Oh, that's fantastic. Thank you so much for talking to us today. It's some really valuable information, and I'm sure that's going to be really positive for a lot of people watching. So thank you so much for taking the time to talk to us today.
No worries, thank you. Cheerio, everyone.
Bye.